This is going to make Malaysia a leading nation in the global digital economy by 2030. In 2021, our ex-PM launched My Digital, a three-phase action plan that will transform Malaysia into a high-income nation with technology and digital tools. The biggest contributor, our fintech sector. With more than 280 fintech startups and companies, Malaysia's fintech industry is expected to transact from $54 billion in 2025 to $111 billion in 2030, an impressive compound annual growth rate of 15.6%. This fast growth can be traced back to the knowledge transfer from our strong semiconductor industry, which has long been a leader in tech innovation. That laid the groundwork for fintechs to adapt and scale quickly. But is all this growth enough to really drive Malaysia's economy forward? To give you a better picture, I dive head-on into this topic to give you the inside scoops of this high-growth industry. So over here we have Richmond, COO and also co-founder of Versa. So Richmond, what is Versa for the average viewer out there?
We're a homegrown digital platform that offers a curated selection of mutual funds. We make saving and investing very simple and affordable to help our users build good money habits. So back in 2019, we noticed this company in China under Alibaba called Yuepao. They were using this product called money market funds to help Chinese people save faster and better. Money market funds are funds that gives you higher returns than your fixed deposits. A very similar low risk profile, but without the lock-ins. So we started Versa with a similar product in Malaysia.
Fintechs are transforming Malaysia's financial landscape by making financial tools and educational resources accessible to just anyone with a smartphone. And thanks to the rise of fintechs, our country is ranked 20th in the global financial including index. Yes, there is still a long way to go for Malaysians. In fact, a 2022 survey by BNM showed that 47% of Malaysians are not able to raise 1,000 ringgit in emergencies. That's living life on the edge.
Okay, a few things right when we ran our research. So our initial research showed that number one, people don't save or invest the right way or optimum way. So if you ask around, a lot of people still save in savings accounts that gives you 0% interest.
Very low.
Yeah, very, very low. Number two, they find it to be very, very complicated with all the financial jargon. The third one is, and the best one, I think everyone goes through this, is that they're very scared of losing their money. But they don't know that if they don't do anything, they still lose money to this thing called inflation. So what we're really trying to solve is the fear of investing and lack of knowledge. We're here to tell you that, with Versa, you don't have to wait or learn about investing first. You can just put your money into one of our products while you learn, and then you're in the game already, right?
And now, Versa is elevating your wealth management experience with Versa Quest. Versa just launched their Welcome Quest campaign, and it's a free treat for anyone looking to grow their idle money at little to no risk. If you're a new user, you can earn an additional 2% per annum on top of the base return by simply depositing 1,000 ringgit into your Versa funds. This means instead of the usual 3.7% per annum, you'll get a total of 5.7% per annum until the end of March 2025, capped at 30,000 ringgit. So, whether you're new to investing or just getting started, this is a great opportunity to grow your savings faster with Versa Quest. Feel free to use my link down below to create your account today. Now, let's get back to the video. But even with all these financial products and services, there is still hesitancy for a lot of Malaysians. According to a Ringgit Plus survey in 2024, 51% of Malaysians have not started investing because of many factors such as low wage, the increase of cost of living, and lack of financial literacy. I mean, would you blame them? Financial education is not even a part of our formal education system. How would you expect Malaysians to appreciate the importance of proper financial planning? But it's not all doom and gloom. The survey also found that 95% of Malaysians have taken proactive measures to address their financial situation, and 47% stated that their financial situation has gotten better from the previous year, which is 2023.
I think despite having such a lean team in a short couple of years, we've really managed to acquire more than 250,000 users and more than 1 billion ringgit in deposits.
That's definitely a promising sign of Malaysians starting to embrace the fintech offerings, but it doesn't come without its own set of challenges. Unlike the established traditional financial institutions like banks, many digital businesses where people's hard-earned money is involved are still struggling to gain the trust and confidence of consumers. These worries are reasonable. In the span of just 3 years, a total of 3.2 billion ringgit have been scammed off Malaysians. I'm sure you have all seen the Jangan Kena Scam campaigns, which is one of the many initiatives by the government to help people to be more aware and financially educated. And you know the SMS OTP one-time password that you always get? In 2022, BNM has issued that any financial transaction must use a more secure form of authentication, like the multi-factor authentication MFA. Hence why you got all the Maybank secure to you and PB secure signed today, and the fintechs are not excluded as well.
Firstly, we will comply with all data protection and security acts in Malaysia, including the PDPA. Some of the key measures that we implemented are number one, data encryption. So we encrypt all sensitive data to make sure our customers or users' information is stored safely during transmission. Number two, multi-factor authentication, right? We want to make sure that's really you signing into your account. And the third one, we conduct regular security audits. What that means is we hire third-party hackers to hack us before the real hackers do.
But as secure as cybersecurity can be, it just isn't enough to overpower human greed. Enter the infamous JJPTR money game scam.
Police believe that more than 400,000 investors have put money into the JJPTR scheme.
So, to stop this from happening again, regulators like BNM and SC have the challenge of coming up with rules for this fast-moving market. And unlike banks, fintech regulations aren't as clear-cut, mainly because they need to balance innovation with consumer protection and financial stability, while also taking into account the fast-growing nature of the tech-driven industry. So what license does Versa have to be able to manage people's money and maybe even invest people's money?
We're regulated under the e-services RMO guidelines by the Securities Commission of Malaysia.
Are there any licenses with Bank Negara Malaysia, or do they scrutinize or regulate or audit you as well?
No, we're not a banking product per se.
So Versa, being a fintech, is not a bank, so you won't have the PIDM guarantee up to 250,000 ringgit. What do you have to say about that?
I think it's important to understand what the PIDM covers first. So PIDM typically covers banking deposit products, also your savings in banks, right? Versa being a digital investment platform, not a banking product, hence no PIDM protection. But we definitely have measures in place to secure our users' funds. So for example, when users place our funds with Versa, they're not actually placing it in Versa's company operations account. All their funds are separated from our operations, so it goes straight to a reputable trustee company. So the trustee company is mandated to only use it for buying and selling of the funds and making sure that the fund is returned to you as an investor.
So in that sense, can I say the trustee is also licensed and protected?
Definitely.
But above all, the main difference between traditional financial institutions and fintechs goes beyond just the regulations. It is also the speed of innovation. Fintechs have a clear advantage when it comes to quickly adapting to new technologies and trends.
In corporate, multiple board meetings, rate tapes. But for us, firstly, we designed the hierarchy to be very flat, so decisions can come in a matter of hours, minutes, right? It's super important, speed and how fast, how many decisions that you make. We make many decisions, right, in a day. Many wrong ones too, but over time, it's the right decisions that really propel the company forward.
Fintechs are transforming the way people manage their finances as well. Do It Now has revolutionized payments with QR codes. Wise eliminates middleman fees and offers more transparency in currency remittance, while Versa makes wealth management easily accessible and more affordable to day-to-day Malaysians. And what really sets fintechs apart is their ability to leverage user data to provide more tailored options, all while placing a heavy focus on user experience. If you have tried any of the local fintech apps, I'm sure you can tell it's miles beyond the traditional banking apps. These, plus their ability to innovate quickly and focus on what users need, gives fintechs a unique edge in the financial sector.
So internally, planning-wise, we have a very detailed 1 to 2 year plan. I think anything beyond that is very challenging. Operations and execution-wise, you have to be very flexible. So what that means is most teams are split into two, the change and the run team. The change team focuses on really trying new things, right? New revenue initiatives, can be a crazy marketing idea. The approach to the team is try new stuff, learn stuff, fail. If you fail, go again. So yeah, we really encourage people to try new stuff. If you fail, you're not going to be penalized, but we expect you to learn from it. The run team really then just focuses on operations, making sure it's very smooth and very robust. So that's on the product side. On the technology side, we also want to improve personalization, advanced analytics. So what that means is we want to really understand the user. For example, their risk appetite, and not the one that they just fill in at the start of the app. I'm a high risk, low risk, because we find that usually inaccurate. So understanding their risk appetites, their goals, where they are in life, and then we have to tailor the right education to them. That reduces friction, and then ultimately, when friction is reduced, they will start going back to the habit of saving and investing.
Let's not forget AI is also playing a crucial role. If done right, it will help with almost everything from fraud detection to personalizing financial services. Although integrating AI into the financial sector comes with a whole other set of challenges, from infrastructure upgrades and training AI models to building consumer trust. But these challenges aren't stopping the evolution of the finance sector. According to BNM, as of 2022, 84% of the 25 surveyed financial industry participants are actively using AI, and 92% of them are developing AI projects in Malaysia. So one thing is for sure, our local financial industry is not shying away from incorporating AI into their businesses. Does AI play a role, or may play a role, in Versa's product or Fintech's product in general in the coming future?
For sure. In fact, we have to lay out the foundations today. So a lot of AI relies on a huge amount of data. So I won't even go there yet, because AI is a commonly overused word, right?
Yep.
But what we have done now is we have a data warehouse to make sure that all the data, the infrastructure is built today, so that when the time comes for us to really hire the right AI engineers, they have the infrastructure all ready to go.
So basically, you guys are ready to deploy AI, but you are not jumping on the bandwagon yet. You are making sure that the systems are safe and reliable and secure
robust,
for the customers before you can really deploy it.
Yes, that's right.
And with all the advantages that fintechs bring, it's clear they have the potential to outpace the traditional banks when it comes to delivering products that meet evolving customer needs. So is there at any point where Versa or fintechs in general would have the concern of, hey, banks have 200 times more capital and liquidity to do whatever you guys are offering, right? Why can't they just do the same thing? Are they always concerned about this?
I think it will always be a concern, but I think it falls under the same line of competition, right? So if we are afraid of competition, then we don't run the business at all. So not just banks, other people can come in the space. A new fintech can come and compete, right? So then it's really doubling down onto the vision of where we're going ahead as a company, what we want to do, and really going ahead and moving full steam. With regards to banks, right, a lot of them are focused on the high margin products first. So your loans, home loans, they all have a much higher margin than the wealth business, right? So, but the wealth business is to really help people grow wealth. So yeah, to say that I'm not worried at all, not true. But we have a set plan, we know where we're going, and we just have to double down on that.
So essentially, this is a blue ocean that you can carve out your own segment and still eventually survive or still thrive, even though in the fintech space in general is very competitive. But this space, you still can thrive with it.
Yes.
The potential for growth in the fintech industry is huge, with investments pouring in and government initiatives ramping up. Plus, digital banks launching left and right. Malaysia's financial industry is becoming a highly competitive and rapidly evolving space. But the big question is, what comes next?